When you take a look at that spread,
Yeah.
what's the implication for investing on that?
Well, I mean, I think that there's been, by the way, this was as big as the storms Harvey and Irma were, a lot of lessons were learned, both in the commercial side and on the trading side since Katrina. So we didn't see as big a blowout in terms of cracks, for example, with products going way out to the degree that they did the last time. They went out a couple of dollars, but nothing like the $25 we saw during Katrina, for example. And I think that what you're seeing in the blowout in spreads here between TI and Brent is a temporary thing. There is quite a lot of crude that needs to be refined at this point that's backed up. That is true. That's dropping, cash prices down for the moment. But in the end, what's going to be really hit on the back end of this is not going to be the refining side. It's going to be crude production. Refining is getting revamped, and that's coming back online pretty quickly. What's not coming back online so quickly is the production in the Eagle Ford Shale, for example. Production in the Gulf of Mexico. I mean, this was tied down pretty tightly and will take a long time to restart, as opposed to refining, which will restart rather quickly.
And I want to hit on this because this is a counterintuitive view. Goldman Sachs had a note out today saying it's going to be demand, not production, that's hit. I was talking to many CEOs who have assets in the Eagle Ford last week, and they're like, yeah, we'll be up and running. It's totally fine. Maybe just a little bit of a backup. No hit on earnings. Why is that wrong?
Well, like I say, I think that there is, for example, right now, if you look at the pipeline, what's in demand right now? Well, there's refining that's in demand. We need to take a lot of product and get gas prices back down. We need to take a lot of crude and turn it into product. But what there isn't a backlog in terms of production that's necessary here. So if you have wells that are down, if you have assets in the Gulf of Mexico that are down, you may not be so fast to restart those as quickly as you might otherwise, because there's plenty of crude out there. And there's really no need to add to a glut, especially at these lower prices, especially if you figure that this is a temporary disconnect between what is a global price, which is, as you say, $6 higher than where we have the United States price right now.